In this video, we're going to take a look at the very important question of right now whether or not the markets are in a bull market or perhaps they are in a bear market. Which markets are in bull markets? Which markets are in bear markets? And how you should trade and position accordingly. Let's take a look at it really quick. And you can see here the Nasdaq is just making new all-time highs. Obviously, the chart looks structurally very, very bullish and continues to be. But obviously, at the same time, the Dow Jones is also not participating in that. It's not making new highs, while the Nasdaq is trading at new highs. This is actually technically not looking as sound, and you could see that also playing out here on the S&P, looking a little bit better than the Dow, but also it's also not yet looking structurally so positive. So we have this bit of a divergence. What do you do over here? We're going to also take a look right now at some really exciting arguments provided about why this market right now is a bear market. This is by Sven Henrich of Northman Trader, who's obviously a renowned perma bear. However, it's very important to go ahead and lean on someone like Sven as you are towards potential market tops. As these things do take a little while to play out, you'll be able to see them playing out and know when it's time to really attack to the downside. Sven was actually great towards the top all the way back in January and February into early March. Here he's showing a chart of the Fed's balance sheet in blue increasing, and then over you have the S&P 500 in red. I want you to watch what he's pointing out as the Fed's balance sheet actually declined a little bit. That's when the markets started to pull in. This is the S&P 500. This is the S&P. So what's next, by the way? Are we going to see an expansion of the Fed's balance sheet? Are we going to see more stimulus? Or are we going to see the Fed trying to actually get back to levels that it was at prior to the crisis? That's a question that you have to figure out. I do believe that the U.S. Treasury, which is sitting on $1.5 trillion, will be looking to stimulate the economy going into the election. Whether or not the U.S. will come to any bipartisan stimulus by this summer, well, that's another debate that you need to be asking. Let's see what else he has over here. Corporate debt, right? This is the corporate debt ratio. Obviously, this is one of the biggest problems that we're watching when solvency, when liquidity doesn't make up for solvency, right? And over here, you could see, though, there's still quite a while. Could be a year or two before corporate debt would release, would be breaking an area threshold that when rising debt ratio damages growth. There's still some time before that becomes a problem. What's propelling the Nasdaq to new highs? Now, as you remember, we did point out that the Nasdaq was actually trading at all-time heights. What Sven is going on to say what's propelling that to happen, for that to occur, that it's the usual suspects. It's Amazon, Microsoft, Apple, the three companies he's going to highlight, with their market cap now exceeding $4.35 trillion, the four of them together. That's 20% of the US GDP. It's not bad with their employee base being equivalent to 0.34% of the US population. All right, now you can see Microsoft is quite extended. When I say extended, what do I mean? This over here is the 5-year exponential moving average over here, and Microsoft is pretty far extended from it. Now you could say it is mostly, for the most part, stayed in line with the 5-year EMA or above it. Only rare occasions back in the dot-com bust in 2000, year 2000, and then again during the 2008 crisis, it also briefly, here in 2002 as well, briefly stayed right under the 5-day EMA, and most of the time is trading above it, right? But now look how far extended above it we are. That's abnormal, and you would expect when you're here this far stretched away that you would see some reversion to the mean. It's not just Microsoft, it's also Apple and Amazon. The two exact same things are happening. Now, I did mention that Sven could be good to understand when there is a market top. Here's the Dow Jones, and just look at this wedge that it is so far painting, and it's a beautiful, this is a bear market to me, right? We're not talking about the Nasdaq right now. We're talking about the Dow. If this breaks to the downside, that could set off a cascade. That's when you want to be looking to be selling, right? That's break of this. You want to be, as we tried over here, you want to be very, very alert for downside continuation. But right now, we continue to be looking to hold the support to trade back up towards the top of this range. And the thing is that these things could go on for quite a while longer. Why we want to be aware of when the top is going to be put in and always monitoring the market. Is now the time we're going to see a top. Here is a chart of the triple Qs, and you could see, talking about tech now, you could see that we're towards the top end of this resistance over here. Now, it doesn't also mean that we can't see anything like this. Look how price consolidates in an upward, relentless, slow motion train wreck against that trend line all the way up there, right? So if price continues grinding for the next year or two, you want to be on the right side of that trade. You might think the market is right now ready to crash and it doesn't make sense. It doesn't mean, again, go back to the liquidity. We don't know what the Fed's going to do here. It just weaned off a little bit. If you go back to 2008 when they first injected and then took out some money initially, that went back and forth between injections and also retractions of money. Again, also watch out for stimulus coming out from the governments, as well as from other central banks across the globe. It's not just the Federal Reserve. And also take a look here right now. This is, again, from Sven. He's showing it. Look, it's only the Nasdaq that's in a bull market. Here in yellow is the Nasdaq. He's only tech is in a blue market. It's up to date 15.65%. It's up 15.5%, right? But if you look at something over here, he has over here down 30%. The BKX. What is the BKX? That is the Nasdaq Bank Index. Banking, obviously struggling, lagging, and as we might go in the future to negative rates, that would really crush the U.S., the banking sector. So what's in a bull market? What's in a bear market, right? And that begs the question, if this is going to continue, if this is going to continue, are we going to see, is it the Nasdaq that's going to continue and tech continuing to lead the way to the upside as it did during 2000? Or are we also going to see the Dow and the S&P participating? Listen, even if the Dow and the S&P make new all-time highs during this move, then at that point the Nasdaq is going to be ballistic, don't you think? I think the Nasdaq continues to lead the way to the upside. If you're bullish on equities, I think that you want to be involved in tech. Now, is this something to consider playing to the downside? I would be interested to see what the Russell 2000 was. That is a great index option to play if you're playing the weakness here of the bear market, or when we do eventually see a breakdown and a signal, right? When we're starting to really look for perhaps even a move that will take us to test the March lows. Well, yeah, maybe then you want to be short the Russell 2000 or short the banks. You probably don't want to short the Nasdaq up there, but when you're looking to buy off support, and if you're looking to continue for this bull market and then in tech to continue, then I think you should be continuing right now to continue to look to buy off supports, whether or not it's the Nasdaq or the S&P. That's up to you. I think the Nasdaq is going to be leading, and I think that's the play. I made a purchase today with BlackFi. BlackFi has become my favorite way to purchase, hold, and trade Bitcoin. Now, I do hold Bitcoin also offline, but again, I do also hold some with third parties. Now, looking at this over here, I want you to take a look at the investors. And it's funny, it's ironic that Coinbase is such a large investor in BlackFi, because BlockFi is like Coinbase was 3 years ago. Easiest to use platform to buy Bitcoin and other altcoins. And that's what BlockFi is right now. It was a simple wire transfer, same day. They posted the funds a couple of hours later, both times. Very easily and seamless. Now, they do pay you. They pay you for holding Bitcoin right now. They pay you 6%. 6% yearly. So that payout, that interest payout, could either be paid in Bitcoin itself or also in a US dollar stable coin, such as the Gemini dollar. Now, if you're holding a stable coin, they pay 8.6% a year. 8.6% a year annually. So that's something to think about, because what you could do is you could actually also, instead of creating a tax event, let's say Bitcoin's trading at $100,000, $150,000, $300,000, and you don't want to sell it and have a tax event, what you could do is get a loan off of your crypto to get dollars, which you could then use for a ton of things, including to buy a house, or you could actually run it through a business and help with payroll financing and business expansion. So pretty neat way to kind of stay invested in Bitcoin, and then also during the bear market phase, being able to collect 8.6% while you're waiting to buy back into Bitcoin at better levels. And the only one thing that I have to say, Fidelity, by the way, $7 trillion Fidelity investments. That's an enormous investor right there. They're also investors in Backed, and then you got the Winklevoss brothers through their financing arm over here, investing also. And the custody of all the funds are actually provided by Gemini, who holds 95% of customer funds offline in a cold storage, and they hold 5% online in hot wallet in order to have transactions. It is the easiest by far way that I know of to buy Bitcoin right now. I highly recommend it. It is the easiest way to buy and store Bitcoin right now. Now, the only thing that I do recommend is when you're storing the Bitcoin there, you're storing it here, again, trusting that with Gemini, that you do use safe practices. You do it, for sure BlackFi will alert you of what safe practices is. One of the first emails they send you, including setting a whitelist address, a Bitcoin address that you own, that the only funds that can be withdrawn from this account are to that address. So here we go. That's why I'm using BlackFi. That's why I'm recommending them. For a while, I was just telling everyone, go ahead and use them. I'm using them now. Go ahead and use them without an affiliate link or anything like that. But then now with joining, and I recommend it with the same earnest. I just want you to use what I believe to be having the best experience and the best product. Also, right, you want to diverse yourself. Having a hardware wallet offline, whether it's a Trezor, a Cold Card, or a Ledger, all viable options. Safe practices always. Yeah, so you just want to go down to the description, click show me more, and then you have the link right over here, BlackFi. That's obviously an affiliate link. It helps support the channel. It does not cost you anything extra. Do appreciate that and all your support.